Here's the hard truth. As of mid-2025, UK credit card borrowing costs have climbed to their highest level in nearly 2 decades. The average annual percentage rate on cards sits at 35.7%, while cash withdrawal interest rates hover just under 30%. At the same time, the typical household is carrying £2,579 in card debt, and almost half of active accounts are rolling balances from month to month. This isn't about a few careless spenders. It's the system working exactly as designed. Credit cards are not just payment tools, they're finely tuned debt machines. If you think you're too disciplined to fall into their traps, the data suggests otherwise. Let's decode what's really happening in the UK credit card market right now. In July 2025 alone, net borrowing through credit cards reached £0.8 billion, up from £0.7 billion in June. Annual growth in credit card borrowing is now running at 10.1%. These aren't just leftover balances from shopping sprees. This is active borrowing climbing month after month. Outstanding credit card debt in the UK stands at over £73 billion, and nearly 47.5% of those balances are being hit with interest. For context, that means almost 1 in 2 cardholders isn't clearing in full each month. Average spend per card is also rising, now around £372 monthly, up nearly 10% year on year. Contactless makes up 67% of transactions, and with convenience baked in, spending feels weightless. But behind every tap, compound interest is quietly loading the system. Fees and the hidden economics of every swipe. Interest rates aren't the only way banks win. Credit cards in the UK extract money through subtle spreads and charges. Take foreign transactions. Even when a card advertises no foreign transaction fee, you'll often see a quiet markup in the exchange rate. Over time, that small percentage shaved from each overseas payment adds up. Then there are interchange fees, capped at about 0.3% in the UK. That's far lower than in other markets, but it still means merchants are paying into the system. And because businesses build those costs into their pricing, all consumers effectively subsidize credit card rewards and perks, even those paying with cash. The system isn't just about you versus your bank. It's about a flow of money woven through every purchase, nudging margins in ways that aren't visible on your monthly statement. Credit cards are engineered around psychology as much as economics. UK regulators required lenders to show customers how long it would take to clear balances if only minimum payments were made. On the surface, this looks empowering. In reality, it plays on guilt and nudges people into repaying a bit more, enough to keep balances turning over and interest flowing, but not enough to end the cycle quickly. Rewards are another masterclass in behavioral design. Cashback, points, air miles, they're marketed as freebies, but in reality, they're funded by 2 groups: merchants through interchange and borrowers who carry balances. The person posting their free business class upgrade might not realize it was paid for by hundreds of others paying 30% APR on their balances. This isn't coincidence. It's behavioral economics in action, shaping incentives so that the house always wins. Every swipe generates data: where you shop, how often, what time of day, and even what combinations of products you buy. In 2024, total card spending in the UK hit £249 billion. That's not just a mountain of money, it's a goldmine of consumer intelligence. Banks and networks anonymize, package, and sell these insights. Retailers buy them back to refine pricing, push offers, and predict who will click "Buy now." In practice, your spending habits are worth almost as much as your interest payments. Here's a twist. Being a perfect borrower doesn't necessarily make you attractive. If you pay your balance in full every month, you're not as profitable. Algorithms rank you as low revenue, which can mean fewer premium offers or reduced incentives. The juiciest deals, high-limit cards, long balance transfer windows, reward multipliers, are often dangled in front of people the system thinks will eventually slip. There's also a darker side. Credit card debt isn't always voluntary. Around 1.6 million people in the UK have been pushed into debt by someone else, often through financial abuse in relationships. One survivor reported over £130,000 in debt racked up in their name without consent. The credit system in these cases becomes a tool for control and harm, with long-lasting scars on credit histories and financial independence. Even as borrowing grows, affordability is collapsing. Since 2021, UK card APRs have leapt from an average 26% to nearly 35%. Meanwhile, complaints about unaffordable lending have surged, up 76% in 2023 alone. Regulators are scrambling, but the structural design remains tilted. Every solution seems to patch symptoms while leaving the mechanics untouched. So how do you play the game without becoming a statistic? Refinance wisely. Personal loans are often cheaper than card borrowing, with fixed rates undercutting the average APR by a wide margin. If you're holding a large card balance, shifting it into a lower rate loan reduces compounding drag. Use interest-free offers strategically. 0% balance transfer offers are powerful if treated with discipline. But always track the calendar. When a 24-month window closes, rates can jump instantly. Build repayment milestones long before the deadline. Prioritize avalanche payments. Target the highest APR card first. With UK card APRs now around 35%, eliminating one expensive balance quickly saves more money than spreading repayments evenly. Limit stored cards. The rise of one-click and tap-to-pay makes spending frictionless. Adding small amounts of friction, removing stored card details from apps, or setting transaction alerts gives you breathing space to consider every purchase. Who wins in the end? It's tempting to view credit cards as neutral tools. How you use them is what matters. But the system isn't neutral. Every feature, from rewards to minimum payment notices, is designed to extract value. Yes, you can earn perks. Yes, you can use cards responsibly. But the statistics make clear that the majority don't escape untouched. For UK households, the reality is billions in annual interest payments, rising defaults, and borrowing that keeps climbing despite rising costs. The credit card isn't just a wallet accessory, it's a cultural infrastructure shaping how people spend, save, and struggle. So the next time you tap your card, remember, that purchase buys more than coffee. It fuels a system that thrives on keeping you in its loop. The smartest hack isn't chasing rewards. It's recognizing the game for what it is and stepping through it with your eyes open.